Let's talk about what an investor does in this new environment of increased inflation and increased interest rates. First of all, tell me what's going on with your company. Are you seeing less deal flow?
No, just the opposite. We're seeing more deal flow. We're seeing more situations where companies are having difficulty figuring out what to do. We're seeing situations where 9 months ago, financing a transaction of XYZ size was nothing. It was, as you said, money was free. What's changed dramatically, I mean, think about the impact of the doubling of interest rates in 8 weeks. Doubling, it's just 8 weeks earlier, interest rates were 2.5 to 3, and now they're 5.5 to 6. That's an enormous change, and it's going to slow down everybody's activity. It's going to, for sure, impact getting deals done. But in our particular case, because frankly, I've oftentimes told the world that, when I'm liquid, the stock market can't go down. It only goes down when I'm illiquid. And here I am sitting there with a level of liquidity I've never experienced in my life, because my focus for the last 3.5 years has been on nothing more important than liquidity.
So you've got a significant deal flow. If anything, it's bigger than it was before. What about the quality of the deals? Are they different from what they were, for example, pre-pandemic?
I think they are, because I think they're a little more realistic. I think in pre-pandemic, when money was free, there were transactions. I mean, the whole SPAC market was we did a SPAC and chose not to take it to the next level, because when we did the SPAC seemed like a very interesting way to, in effect, monetize opportunity. It very quickly became a highly speculative scenario dependent on preposterous valuations that ultimately led to the crash of the whole SPAC market. World has changed a lot since then. And the change is basically modifying what you can do. On the other hand, there's always demand for capital, and there's always that demand is always on the shoulders of those that have preserved liquidity.
So let's talk about some specific investment opportunities. Energy. Yeah, I mean, you know energy terribly well.
Yes.
Do you see opportunities in energy right now? There's been a lot of tumult in the marketplace because of Russia and Ukraine and all sorts of reasons.
Yeah, I mean, we continue to do something in the energy space, not as much as I would have thought when this period began. The volatility in the energy space has been so extreme. I mean, just think about it. Within a 12-month period, the price of oil, vacillated between 30 and 120. That's an incredible level of volatility, making investments extraordinarily difficult and challenging.
Do you see a prospect of a little less volatility? Because you have on the one place OPEC Plus trying to limit things. Now you got the U.S. government, which, if it's not trying to regulate the price of oil, it looks kind of like it is, because it says when it's going to sell and when it's going to buy. So it looks like it's got a bid and ask price. Yeah,
but we also have an administration that's very anti-oil. And in my judgment, that anti-oil provision is only going to hurt the United States. I mean, we were producing 11 million barrels a day of oil. I don't know what we're doing now, but I think it's down 2 or 3 million barrels a day, as we've cut back on capital for fracking, et cetera. Not a healthy set of circumstances.
Now, the oil companies almost invariably say it's because of the administration, because of regulation, and their move toward renewables, things like that, so they don't want to make the investments. The administration says, no. You could simply make the investments. The problem is that your investors want it returned to them, that it's really a market phenomenon. It's not the government.
I'm sorry, I've heard that speech made by the government. I don't believe that in the least. I think, what we have is we have a eco-friendly government that doesn't understand that even if there is a future, of non-fossil fuel future, the idea that it's going to happen in 15 years, I mean, talk about sunk cost. I mean, it just doesn't make any sense. And so we're in effect creating a shortage by virtue of depleting oil, depleting capital into the fossil fuel area, that creates inflation that it just doesn't make any sense.
Sam, as I recall, you bought some distressed assets in oil back in 2019, thereabouts.
That's correct.
Did that turn out to be a good deal given how badly we need the oil
now? Probably 50-50. In other words, again, it didn't do as well as we expected because the volatility in that commodity was just beyond belief. I mean, nobody had ever seen that happen before.
Are you interested in nuclear? I mean, a lot of people say we can't get to where we want to go without some nuclear component.
Yeah, I personally agree with that. It's like cryptocurrency. It's one of those areas where I don't understand it well enough to be able to invest in it.
But given the difficulties with fiat currencies you've identified, I understand you have bought some gold, not a lot.
Yes. First time in my life over the last few years, I've bought gold securities and actually bought hard gold.
And are you a buyer going forward?
I'm not sure. I bought it kind of as as my own definition of a hedge. I haven't done well with it. I haven't lost on it, but in a world where I think fiat currencies are being massacred or hurt, I think in that kind of a world, more focus on some hard currency is relevant.
You're very much identified in a lot of people's minds with real estate. As I recall, you started that maybe when you were in law school at the University of Michigan on the side. Undergraduate, University of Michigan. So talk to me about real estate, where we are right now. We've got some record high rent prices. We've got mortgage rates going up. Tell us your view on the real estate market right now.
For all practical purposes, I haven't bought anything in 10 years. And where the opportunity has created, I've sold it a lot. I felt that the real estate market generally has been overpriced, particularly on the private sector, as opposed to, I think the public markets have actually done a very good job of sensitizing people to what's going on in real estate. On the private side, I mean, we took over a public REIT 7 years ago with, I think it was $13 billion of assets. We bought nothing with that portfolio and sold 142 out of 145 properties. What's really incredible is we sold 142 properties and I don't have one sense of regret. Not one of those deals do I say, geez, I wish we hadn't done that or waited if anything, we should have sold it faster, earlier, quicker. Because it was because of free money, it created a price structure that, frankly, was very disadvantageous to the buyer.